When it comes to the health of the consumer, looking at their credit defaults, their credit delinquencies can tell you a lot about the health of not only the consumer, but the economy. Joining me today is the CEO of one of the credit scoring companies, VantageScore, Silvio Tavares. Silvio, thanks for joining me.
It's a pleasure to be with you, Sharon.
Tell me a little bit about your latest report. It showed that delinquencies across the board, whether we're talking about credit cards or auto loans, are actually at near the highest levels we've seen in about 5 years. What's driving the delinquencies?
Overall, I would describe the overall health of the consumer as both credit healthy, but also credit cautious. That delinquency number you just highlighted is very, very important. Delinquencies have increased substantially over the last year, and they've plateaued for lower income consumers. But for higher income consumers, we're seeing a different behavior where the delinquencies keep increasing. But overall, credit healthy.
Tell me a little bit about why we're seeing this delinquency among high-income consumers. You looked at consumers making $150,000 or more, and we are seeing an increase in delinquencies there.
Yes, and it's one word. The cause is inflation. Early on, we saw inflation take a big hit towards lower-income consumers, but those delinquencies have plateaued through the mid of 2024. As we look at high-income consumers, all of a sudden we're seeing delinquencies there increasing dramatically. And just to quantify this for you, if you look at lower-income consumers in 2024, their delinquency rates increased 24%. But for that high-income consumer, the growth was 100%, over 100% in fact.
Why is that? Why is delinquency rates going up? You said 100% for higher-income consumers.
What we're seeing is a very significant increase in what we would call income-adjusted prices. And what I mean by that, if you're a high-income consumer, well, you tend to have a more expensive home. You tend to have a more expensive car. Well, then the insurance for that more expensive home or that more expensive car is going to be higher. And we've seen significant increases in services costs like home insurance, like auto insurance. And that is hitting the high-income consumer harder than most, and that's what's driving that delinquency rate.
What does that tell us about the economy? What do you think that we should know based on what we're seeing from high-income consumers?
Well, for sure, it's caution ahead. And in fact, you could see that behavior through the end of December. You could see that overall consumers were not adding significantly to their credit card balances. They were very self-controlled in how they used their credit cards. Credit card balances were up 2.9% on a year-over-year basis. And that sounds okay until you look at the fact that annualized inflation was up the same amount. So basically, consumers are saying, we're going to spend more, just about more as the same as inflation, but not more than that. And that's caution ahead for 2025.
So let me ask you about something that a lot of consumers are concerned about, and that is their student loan debt. How is that impacting their health right now, and how is that going to change in 2025?
Well, there's a big change coming this month. Many of the student loan servicers, federal student loan servicers, are going to start reporting late payments. For the last several years, they haven't been doing that. So late student loan payments haven't been impacting your credit score. That's changing in January. And so the thing is, if you've been paying your student loans on time throughout this period, your Vantage score is going to go up because you weren't getting credit for it for the last several years. Now you are. Now, the bad news is if you haven't been paying, the impact to your credit score could be as much as 80 points in terms of a decline.
There's a report that came out today about the cost of the insured losses of the wildfires in LA, about $40 billion. And I'm wondering what impact do you think that might be having on, or could potentially have on, consumers going forward and looking at their credit worthiness and all of that?
As we look to the forest fires, and our thoughts and prayers are with the victims of those fires in California. VantageScore happens to be headquartered in California, and so we've been monitoring that situation closely. The fact that so many homes have been destroyed, that's devastated a lot of consumers, and that cost of the damage is going to be spread across all consumers of those insurance companies across the country. We expect that's going to raise insurance rates, and it's going to further the delinquencies that we've been seeing already in the high income category over the past year.
Thank you so much. Silvio Tavares, VantageScore CEO, joining us today to talk about creditworthiness, credit health, and the health of the consumer. Thanks so much.